Hello again, everyone. I hope you're all full and ready for the next panel. This one will be a little bit different, conducted differently. There will be two speakers on stage. There will be no moderators, and each speaker will step down within 10 minutes, and the next one will come up.
Okay.
And it's going to be an interactive one. So today, starting with Murat Bitirici and Matthew Nichols on stage. Have a good one. Thank you, guys.
Hello. Hello again. Hi, this is Murat, Head of Innovation of Akbank, and welcome today to our great panel. It will be actually different than the others because it will be just one-to-one meeting and conversations. We will talk about the fintechs, the trends, and how it affects banking and in our industry today. And we've got a valuable partner, Matthew. Welcome.
Afternoon, everyone. My name is Matthew. I work for Fidor. For those who don't know Fidor, Fidor is an EU digital-only bank. You can find us in Germany and in the UK. Here today to discuss various open banking topics, but first, Murat, I'd love to know what Akbank are doing in this space.
Yeah, sure. Thank you so much, Matthew. Yeah, let me explain about how we do in Akbank, how we actually our approach for the innovation. Actually, it's mainly rely on customer needs and customer priorities, and it's all our business. So the customer segments and business is actually more actually heart of our focus. So it's really critical. And every trend that we see affecting even for the retail banking side, also for the commercial banking side, also affects what the type of innovation that we does in Akbank. And mainly what we can see, this kind of actually areas that has been affecting, I will just give you a couple of actually examples. One of them is actually that we see conversational banking area. What this kind of actually see coming from the customers that we see until now, that clients seek better services, clients seek better conversations, clients seek smart banking services because they see this kind of services apart from banking that they have been actually get some value from other tech giants and other industry partners as well. So this is the expectation level actually that the client actually also gets some reactions from the banking side. So this is the first part that I wanted to talk about the scope. And if we go for actually the methodology and the structure of the innovation, it's also important that we have to have a structured actually approach, and it should be something like a precise and measurable methodology that you have to put on the table, and you have to create the innovation on top of it. And there should be a time box period that you have to run the innovation because it will lead to a great and better time to market in the end. And on top of it, all these aspects of scope and actually the approach, the last element that we see is actually the design. The design principles and the design way of doing the innovation is really critical because this customer experience that we see, and actually it has already based on the customer designs that the client really gets to some value in an easy way, in a delightful way, and actually in a value that they can see and they feel it. So how do you see in Fidor actually, Matthew?
Yeah, so I think you've mentioned some really interesting areas. And for me, when we look at the banking environment today, everyone talks about how banks are being disrupted. And I guess it's fair to say this is how Akbank are disrupting themselves. But for me, disruption has always been in banking. And I think it's the type of disruption that is now changing how banks view and deal with these areas. For example, I mean, banks have always been majorly disrupted when we've looked at the introduction of ATMs, internet banking, cards. The difference in today's landscape is that, instead of banks having maybe 3 to 4 to 5 years to actually understand what those changes entail and how to react to them, now they have 3 to 4 to 5 months. And when you actually look at the broader landscape, regulations have changed, there's an increase in competitive landscape, and it's arguably, and the most importantly, is that the customer's expectation has never been higher. And that's why there's a real focus of banks like Akbank and like Fidor that need to focus on building an infrastructure to consume new third-party technologies. So we mentioned things like social banking, but we also look at other areas at Fidor, especially in the peer-to-peer lending space, in other areas in the lending space as well. And effectively what this means is that enabling this approach shifts a bank's mentality. And at Fidor, we look at practicing an API approach. So one of the ethoses that we really hammer home is that we need to be API-centric to be customer-centric. Because ultimately, when we were scaling Fidor, for those who don't know Fidor, a quick introduction, we're a digital-only bank formed for around 10 years. And back then, open banking didn't really exist, it's fair to say. So we took the approach of diversifying our capability and our offering through third parties. So what this actually meant is that when we look at building the bank and scaling the bank, there was a pretty quick outcome. And that was that the plethora of offerings that customers want from a bank potentially versus what's currently offered in the market, it's actually very difficult for a startup bank to be able to take all of those different offerings out of those different silos and to be able to offer them comprehensively. So when scaling the bank, we focused on, as I mentioned, this platform banking infrastructure where we were able to go out, partner with third-party partners and offer an all-in-one banking services. Because from the bank's perspective, we need scale and we need speed, and this is what fintechs bring to the table. It's arguable that from the fintech's perspective that they need a trust and a customer base, and this is ultimately what a bank can bring to the table. And this is how open banking has now influenced not only FIDO, but banks all around Europe. I'd love to know how it's looking for in the Turkish market today.
Actually, thank you so much, Matthew. Actually, Turkish market, when we talk about the open banking, also it's one of the widest areas since we recently talked like a couple of years. Maybe it has gone to 10 years also in Turkey, but the real implications that we see actually since recent years. And actually, to be honest, it's not still yet regulated like PSD2 in Europe that we see actually in Turkey. But there are good things going on, new structural signals that we have seen. Also, they have been driven by the central authorities. And last year, there was a big, actually, fintech meeting, actually hosted by central bank, and all the regulators, insurers, banks, tech providers come together and have discussed about this. And one of the key outputs that we see from this meeting, it was really important that there will be a regulatory basis has been needed, and it will be put on the table. And it was a really big request coming from many parties actually in the industry. So this is the point, but we are not like UK in terms of that. But apart from the regulation point of view, there are many actually implications in all Turkey, and mainly therefore on the commercial banking side for the B2B businesses that we see until now. And the good things actually, what we see apart from this, government actually takes some place in there. Also the banks come together, start to come together by their own incentives, and they have to discuss about some common strategies. Also, last month there was a big meeting with big actually banks come together to shape some open banking initiatives, how can run same open banking structure in Turkey. And this is the baby steps that I see about the discussions, but these are the really critical things that actually having some discussions in here. Apart from actually the implications, what we see actually, last year the Co-op, the same organization actually created a report for API industry in Turkish market. And main actually highlights that I wanted to mention to you is that the banks actually willing to provide APIs and make it ready. But the thing is, the need from the actually customer side, you can think about the fintech side, is much limited in the market. And it's something like a chicken egg game. But it will get some actual pace in the end. And because of this, there will be no regulation. There is not yet standardization in terms of these open APIs on the market and in terms of also the availability itself. But the thing is, the main the flows that we see, like account information, some account aggregation, or some payment initiation, or some transaction and money transfers, are the key APIs that actually the banks are wanted to get in. So these are the things that we see. And actually, what do you see in actually FIDO point of view, and what will be the future for that?
Yeah, sure. So I think that you've actually captured it quite well there, looking at a country that's not obliged to follow PSD2. And that is that PSD2 is really the catalyst for open banking. So even look at broader, we see similar frameworks being built in countries like Australia, Mexico, just to name a few. And I think that the main focal point for PSD2, arguably, is how banks can really move into the game of personalization of services. A quick analogy that one of my colleagues always uses is that, okay, if everyone wants to pick up their smartphone today and share their applications on your smartphone, it's probably safe to say that not one person in the room would have the same set of applications on their phone. And I think this is what PSD2 can drive towards, because ultimately the personalization of services in the banking context can grow to much further lengths. Now we have access to AI and machine learning that can be critical linchpins for banks to be able to take this to new levels. Something that from FIDO, so speaking from FIDO's perspective, as mentioned, we started on this digital banking journey over 10 years ago. So not only open banking was around, but AI and big data, machine learning, I mean, what were those? So we took a fairly different approach. How we went about personalizing our services is that we offered something called the community, which is effectively a bit of an old school approach, more of a social media approach, I would say. And that's effectively similar to what TripAdvisor does for the hospitality sector, what the community drives forward. So we enable the people that use the community to discuss openly about financial services topics. And today in Germany, the community is around just under 1 million people, all contributing to valuable content that Fiddle has a laser focus into. And this enables us to personalize our services because, as I mentioned, in 2009, when we launched the bank, we wanted to take the approach to truly scale, to partner with fintechs. However, the reality is that there's such a plethora of fintechs in the market today. How can banks truly know which fintechs would be the most value to their customer? And that's something that we're now leveraging with more AI capability, but taking it back to the roots, the community is probably the reason why Fiddle is a successful digital bank use case for today and for open banking in general. So I mentioned that it could be easily thousands of fintechs. Today we partner with 90 fintechs across different remits such as FX, peer-to-peer lending, crowdfunding, amongst other investment and other capabilities that fintechs bring to the table. So I think that this is really the common denominator for banks to really leverage how PSD2 can open to a new personalized playing field that ultimately brings the bank from a point where they're no longer looking at the profit margins, they're no longer putting at the other critical areas of revenue that they need to derive from, but ultimately banks are looking at a more of a customer-centric approach, how they can really take banking and leverage new capabilities and to develop new models overall.
Before I will just give my words to my next colleague, I just wanted to have a couple of words as a closing for the open banking side. Who the companies and the fintechs are already ready for the open banking, they will take the lead and they will utilize the first mover advantage, even not waiting for the regulation. I think it's really crucial, also relevant for our market. And thank you so much, Matthew. I just leave my words to my colleague.
Okay, cool. Thanks, Mark. Okay, cool. I think Nigel's up next. Hey, how are you doing?
Thanks, Matthew. Thank you, please. Afternoon. I hope everybody's had a good lunch. I was not too sleepy post-lunch. My name's Nigel Verdon. I'm the co-founder and CEO of Rails Bank. Previous to this, I was the founder of a fintech company called Currency Cloud, which does roughly $2 billion a month turnover. And in the 1990s, I was the founder of a business that was the first waves of fintech that turned the capital markets around in 1990s to early 2000s, called Evolution. And that business, we did the very first foreign exchange trades on the internet, which was quite a thing in those days. Especially when other people were just discovering browsers, we're discovering how to do $200 million trades between Swiss Bank Core and Jyske Bank, as it was at the time.
Okay, cool. Thanks for that. Could we maybe expand a little bit beyond that in terms of what the future looks like for Rails Bank as an offering?
Sure.
We spoke earlier about your upcoming move into Asia.
Sure. Rails Bank, we're building a global banking platform, and a global banking platform where we are providers of some of the services. For example, this Friday we clear sterling directly at the Bank of England. We provide card issuing services and those services to our customers. And we use partners that we slot in to develop other markets. The US, we've slotted in Cross River Bank, and in Southeast Asia, we're launching in Singapore by slotting in Singlife and DBS. So the proposition we have is access global banking or global financial services with 5 lines of code. And we took a sort of a feather out of the hat of Stripe, who launched access, sort of an e-commerce merchant, take money online using 3 lines of code. But we've expanded out the full range of financial services. So we are purely an API-led platform. Fintech companies, brands, neobanks, marketplaces, insurance companies and others sit on top of us to launch their digital products. I'll use one use case. Last week we were in Singapore, and Singlife is a really amazing insurance company, really blowing this ball out the park over there in the fintech world. We're able to stand up a brand new product of a banking product linked into insurance that went live and a prototype of real money, a plastic card issued in literally 4 days. And that shows the power of APIs.
Wow. So what this looks like for Fedor, looking at the Railsbank business model, it's very much, I hear almost the as-a-service model coming into play, right, enabling fintechs, insurance, and so on. From Fedor, we've had some interesting stories along the way, and that's primarily because, obviously, we're a bank at the heart of our operation, and as a result of that, we do something called banking as a service, which is sort of a buzzword or a buzz phrase in the market at the moment that we hear. But effectively, what this entails is that because Fedor owns the banking license, the operations, but also the people running the bank, effectively, this is a very unique proposition that we can scale a true digital banking offering. And it's quite interesting that, obviously, last week we had the news coming out of America with Apple launching a financial proposition in the States. And I know there can be various conversations around the value proposition behind that, but ultimately, I don't think that you can really argue around the trust, the loyalty, and the power of the brand that proposition will bring to the market. And when we were looking at the banking as a service model, when we were little Fedor, we're a challenger bank, quite new on the scene. We're targeting a very niche segment. We're targeting early adopters. We're targeting millennials. And to look at more of a mass market approach, we wanted to look at how different brands could be leveraged to offer banking services too. Because the use case is really, from Fedor's perspective, is that if there's an organization that's not a non-bank, but if they have a footprint in financial services, then this could actually be a very interesting partnership. And what we've actually done in this space, which is quite interesting, is that we've launched a fully scaled digital bank with Telefonica, which is one of the largest telecommunications companies in Germany, through their O2 brand, with around 40 million people. And the main challenge that this addresses from the telco side is that telcos have main challenges around customer stickiness and customer acquisition. And ultimately, with Fedor and our platform offering, because I talked earlier about the platform-first proposition that Fedor has built, we've managed to do some really interesting things with this proposition. For example, we've eradicated banking interest. So instead of banking interest, O2 customers receive data, which is quite a key game changer in terms of taking that person from a secondary account to a primary account. Because when we look at different methodologies or different use cases of how to incentivize the customer, it can be quite a tricky minefield of actually how to transition that customer from using the bank for a small segment of their day-to-day life, but to widen that scale into their primary account. So for example, with O2, the more transactions they do, salary transfers, then the higher the data they get. And that ultimately gives a true business model that Fedor benefits from, because ultimately all of those customers live on our balance sheet. And I think this is quite an interesting as-a-service model, because it truly is growing now into a wider phenomenon that is like with Railsbank and how you're now deriving this into Asia, and you've been taking this throughout Europe predominantly. But maybe circling back a little bit from my question to Murat is that how do you see these different models playing out in the UK?
That's an interesting question. I should declare I've known Fedor since they started, and I had some money in through an investment fund in Fedor in the very early days, and was massively inspired by Fedor's CEO and COO and chairman when they first started out, because they massively trailblazed this market. And to some extent, we've copied some of them as well, just copied with pride. So if we look at, say, the UK, the regulator in the UK, post-2008, the credit crunch, thought there was too much systemic risk within the four banks. And because of that, the credit crunch meant that the British government underwrote to the tune of 60% of the GDP bank loans. So the UK was nearly bust. And it paid just under 4% of GDP for bailing out RBS. So they said this can never happen again. So how do we open up banking? How do we open up the payment systems? So the historical context is important to where all our businesses in the open banking world came from. So the FCA and the Treasury did an amazing job by opening up payments, and the payments network to non-bank financial institutions like ourselves, who can clear with the Bank of England. The third guy's doing that, and there's many more in the pipeline. They also open up banking APIs with the Open Banking Initiative, which has become PSD2, to open banking. And that hasn't been it's been a great step forward, but the actual execution of that, I think, needs to be looked at in some detail. So open banking gives you two things, at least under PSD2 and implementation UK, which is account data and initiating a payment. If you're building a financial services product, you need a few more than the two things. You need to be able to issue a bank account, which you can't do under open banking. You need to send and receive money via different payment schemes. You need to do foreign exchange, you need to access international transfers, issue a debit card, issue credit, or a whole range of services. And the open banking only focused on one thing. It's a baby step they got there. The next piece is, if you look at the APIs, they're designed by committee. They're designed by technology guys as opposed to designed by designers and UX people. And APIs are the UX of developers. They're the things that you consume in an amazing way. And you'll see a colleague, Michael from Token, coming up in a moment. And I don't mean to steal his thunder, but his company has been designing beautiful APIs that do open banking stuff. So you don't have to use the actual standards, because the standards are just very poorly designed in terms of consumability by developers. So you'll ask any developer, they can go live on us or using Tokens APIs super fast, and it takes them a long time to actually get productivity out of the open banking APIs. So I think a big challenge is to take open banking to the next stage is involve this concept called user experience, which we already do in banking apps, take it to the next level in APIs. Now, why are APIs super important? Because everybody pontificates, says APIs, APIs, APIs. APIs are just something that allows you to build pieces and put pieces together with Lego. Because you can take a piece of Lego bank, say like Fido or Rails Bank, and then you can take a service from that, say card issuing, and just take the card issuing bit of Lego, put it into your product, put other pieces of Lego. So you've now got building blocks to build new financial products. And what does that enable? It goes back to this talk this morning. We believe that tech companies will own distribution of all financial services. Banks will end up as trusted sources and custody and manufacturing. And if the two can work together, and they work together in a very harmonious way, because the future will be about the bank's brand being able to be consumed by third-party distribution. That third-party distribution takes and deconstructs the bank where all the cost is, because the cost of running a bank account is $26 per month in a G10 country, and it should be around 10 cents to $1 to be able to do financial inclusion and make money out of it. So by deconstructing banking back to its core, using the power of the brand through the channel. So I'm not going to buy a bank account of Google, I'm going to buy a bank account of Lloyds Bank or HSBC, and enable that through APIs. That is why APIs are super important. It allows that deconstruction and new value chain to deliver to the customer the product and rips out a massive cost in the industry. So the trend in open banking is not so much about, here's some APIs, we can do some tech stuff. It's about fundamentally enabling a new model for implementing banking, where banks become safety and tech companies do the distribution, and that's called the fintech world. Thank
Well
you.
summarized. Okay. Okay, cool. So I think that's my 10 minutes up, and who do we have next?
We have Nika next. Can I introduce Nika?
Okay, cool.
Thank you. Thank you.
Thanks. Hi, Nigel.
Hey, good to meet you. I was going to introduce Nika's full name, but I would have failed dismally because my command of Dutch is not good. So please introduce yourself.
Okay, I'm Nienke Wiggershoed, and I'm based at KPMG in the Netherlands. And I'm responsible there for the digital banking and fintech practice. I have a 20 years history in digital banking, been there from the internet start, the online banking websites, to now the discussions on open banking, beyond banking, banking platforms, and everything around that. So it's a really interesting time to be working in this space. Yeah.
So Nika, so in KPMG, you guys have got a great a brand and really helpful to working with the fintech industry, the digital industry. What sort of programs and initiatives do you have within KPMG within the digital banking fintech space?
Yeah, thank you for the question. I'll split it in two. One is what do we do with the challenger banks and the fintech, and the other with the incumbent banks, because we are working for both. And I think if you look at the services that KPMG provides, both on audit and on advisory, especially what we do for the fintech is quite interesting. If you look at Adyen, for example, and I don't know whether everyone knows what Adyen is, but Adyen is a payments provider in the Netherlands that had a large IPO last year, a quite successful IPO, I should say. And KPMG helped them with getting their license, for example. And it was, as a Dutch national bank stated, one of the smoothest processes in their history. So that's services that we do and projects that we do. At the same time, we are helping them with all kind of other implementation strategies. Just, well, I would say standard advisory work. Some people were already bashing us as advisors, but I think there's a lot of value that we add in that way. If you look at other fintech like SafeNet, we've helped them with getting their Dutch license, and they were the first Brexiteer to obtain their license. So again, that's more on the risk and regulatory side. But we also do more digital transformation. So a large global bank, we've helped setting them up a complete new digital bank, which is a totally different kind of project, from strategy through selection of the ecosystem to the implementation. And the same if you look at a large UK-based bank, we help them in wholesale with the whole new contact center implementation, partnering with Microsoft, with Google, things like that. So it's quite a broad range, I would say, of projects that we do in this space, leveraging all the capabilities that we have in KPMG.
It's quite interesting. You're helping both sides of the competition,
yeah,
as you might say. Oh, we've got technical solution there. But one of the interesting observations we've been debating through with colleagues is what is the outcome, the future outcome of the challenger bank, the neobank. If you look at the Monzos, Revoluts, etc. of the world, or it started with Bank Simple really over in the US, a good colleague who founded that, is your views that potentially the neobank, the challenger bank, they're all going about UX at the moment, but do they actually become multi-financial product distribution platforms? Because they've worked out how to distribute and they've worked out how to digitize a financial product. So they broaden out once they've gone beyond just a current account. And another observation, the e-money based ones, I think worked out quite quickly that there is no money in transactions. It's very hard to make money in it. And lending is where it all goes together. So do you see an outcome where the challenger goes to distribution and the incumbent works better with the challenger? So it's not really challenger, it's helper and supplier.
That's an interesting question. I don't believe that will be the outcome. I see the incumbent banks really working together with fintech, but more the fintech that provide the technical platforms. And they use that especially to set up their separate digital banks. And they use that also sort of a trial to see, can we move our old legacy into this new ecosystem, and will it work, will it help us to become more agile, more customer oriented, etc.
So if I was to paraphrase, it's looking at how technology can help actually take financial services forward in the traditional world.
Yeah, that's a slightly different question. I think then you're not talking directly about a collaboration or competition between the challenger banks and the incumbents. But then there's, especially in the Netherlands, there's a couple of banks that are saying we are an IT company disguised as a bank. I wouldn't fully agree with that. I would say still technology is an enabler to provide the best customer services that you can provide. And I think that's where you see challenger banks currently excelling over the incumbent banks. So they leverage the technology in a much better way for the customer because they don't have a legacy, so it's not a completely fair comparison. Is technology not important for banks? No, I would say it's very important. Is it their core business? No, their core business is banking, but it is so much dependent on the technology and what you can do with it. And at the same time, if you look at the current technology and what it makes possible, it can drive your innovation and it drives the expectations of the customer on what you should provide. So you can't do without the technology, definitely not. It's very important. And you have to give it proper attention, which is not always done. Sometimes it's overdone, saying we are an IT company. Sometimes it's underdone, and then you create, and I think we all sort of know that the large legacy systems that many banks have, if you don't give it the proper attention and maintain it, so it's a bit of that balance.
You get the Lord's TSB problem. So a quick just observation. I was on stage in Paris, and the CEO of a challenger bank said to me that because we've got a banking license, we can write better software. To which I said, my co-founder was a nuclear weapons officer in the submarines for the Royal Navy, and whoever wrote Polaris missile software, which is very was super important software, didn't have a banking license. What's your view on technology? Are banks better at technology, or are tech firms better at technology?
If you want the advisory answer, it depends. But no, sorry. I think if you really look at different banks, there is a huge difference. So challenger banks definitely have the advantage of being able to use the modern technology. That is better technology than the old-fashioned technology. And I should be careful there with phrasing, because I wouldn't say that the really stable core banking systems are not good technology, but they're really slow to change, which doesn't go in this world where you want to change fast. And I think the modern technology enables you to change fast, and that's the benefit that the challenger banks have. There is definitely incumbent banks that also are very good at technology. And I mean, if you live in the Netherlands, you have ING as an example, and they promote that, I think, all across the world. So, and of course, there's pockets in ING where I can tell you, maybe it's not that good, but there's definitely pockets that really are very much advanced there.
Oh, I understand. I used to work with Dick Harrivan, who was the CEO of ING Direct, very closely. One of the things I think you made a superb point there was the fact that the systems that do underpin major banks work day in, day out, and billions of dollars go through them. And trying to change them in real time, like they tried with Lloyd's TSB, is like changing the wheels on a car while you're driving at 100 miles an hour. It's a high-risk thing. They may be COBOL, they may be old-fashioned, but they actually work. So I think you made a very, very good point there.
Thank you.
And I think it's time for me to step down.
You want a third session?
Excuse me?
You want a third session?
Yes?
I think for you it's time to step down.
That's what I meant for me to step down. Yes.
I think Michael really would like to join me on stage right now.
Thank you, Nika.
Thank you.
That's a pleasure.
Good luck. All right.
Hi, Michael.
How's it going?
It's fine. Well, I think my neighbor just nearly sent me off stage, so you would have had a different...
He's actually leaving the building. All right. Okay.
No, thanks. But maybe you can start with introducing yourself.
Sure. My name is Michael O'Loughlin. I'm quite literally the token Irishman. And my role at Token, before I go into what Token is, my role is essentially going out and being our chief storyteller to win over hearts and minds, to actually explain to people what exactly open banking is and how our solution at that matter helps banks and corporates on both sides of the ecosystem excel. So Token, thank you for the introduction. Token is in our third year now, and we raised our Series A back in 2017. San Francisco originated, quickly realized we had a technology looking for a problem. The problem in this case we saw, and the catalyst that was used earlier on, a great description, was PSD2. So this kind of falls into the space of open banking. What we've done is we've created an open banking platform, and this platform is a secure platform that enables banks to truly open themselves up. So when I think of open banking, and I'm a recovering banker, I would say that opening up the vault of data and customer information and indeed money is kind of frightening for a bank, because they are the custodians of value, essentially. They're the trusted institutions And then PSD2, this regulations come along and said, open the doors to third parties. Now to do that, you better do it in a secure way. So we've heard other folks, it's great coming this far down the conversation, I can just repeat what others say, but what others have actually said is true. Open banking with a little o is something that you're going to hear a lot right now. Many banks aren't looking at the long-term vision of what open banking can be. So the little o in this case is compliance. And there's a great opportunity for banks to actually move beyond compliance. So it's like building a house. Everyone's building the one-bed apartment right now, but really they should be pouring the foundation for a castle. And this is something that, if you were to use another analogy that really hits home in the newspapers right now, it's climate change. Everyone is saying, well, open banking, is it that important? Can I ask how many bankers are in the room tonight? Today? Quite a lot. I wonder how many will be here next year. And this is not to be scary or dystopian about the future of banking, but actually there's an opportunity for banks to come together, collaborate, not just with fintech, but with each other, with regulators, with large technology firms, small ones as well, and actually excel. And this is what Token is trying to do. We've created a secure API to help banks connect to each other. And on the other side, we have corporates and exciting e-commerce solutions that want to offer themselves to almost an app store. So in a roundtable meeting before this today, there was a comment, and it was in this morning's panel as well, saying that banks are so heavily regulated. And when you're heavily regulated, that becomes high cost. If you're in payments, you're in compliance. And that's kind of an unfair playing field, competitive landscape. So therefore, banks are finding it harder and harder to innovate. Yes, they have the innovation lab, and that's where innovation goes to die, but that's a marketing exercise, if we're all honest. Bit harsh, a few people are looking at me now, but what I'm saying that is, there's an opportunity for banks to actually do something special, and this is what we're trying to help them with, meaning you don't have to innovate and create all the products you want right now. If you think about the iPhone, it's 11 years old. They didn't create all the products. What they did was they created one secure, simple API for developers to connect to. And banks need to have that mindset now as well. That's kind of where we're at. That's what we're doing.
Thank you. Yeah, and I think we've all heard already about the importance of APIs in banks. And I think we are talking about it right now like it's something new. But of course, already 10 years ago, banks started with an API architecture internally to become more flexible and more agile. And so the difference now is how do you open it up? And if you look at your solution and all the news releases that have been there recently, you seem to be working both on a functional solution that's different from the competition, and you use different technology, if I look at those. So can you explain a bit more on both those angles?
Sure. It's, I'm always reluctant to go into a direct sales pitch, but hey, if the shoe fits. Our solution at its core, and it's actually the reason I joined the company, it had quite a unique product, a unique solution. That unique solution we consider to be our crown jewels. That is the smart token, the reason we're called Token. The smart token, it essentially packages identity, the payment, and in this case the asset and customer data together into essentially a smart contract. And it's cryptographically secure, there's private public key technology included. And when you layer that on top of what exists today in the marketplace, we actually see that a lot of people are trying to focus on the connectivity side of things, but the security, the reason we're there essentially to be innovators, but also risk mitigators. And that seems to be resonating with banks, because we go to banks saying, we will open up that little O to a big O and open up to new opportunities. The new opportunities are, on the other side, Token is going out to developers and saying, what exciting new sexy products have you got for payments, for finance, beyond open banking, that you think banking customers need? Because in the future, banks could lose their foothold. They could lose the foothold, and what that means is other big tech firms, and this came up in our roundtable discussion as well, other big tech firms are looking at Europe as a battleground right now. So you have the Googles, the Facebook, Amazon in the United States, you have Ant Financial, Alibaba, WeChat, etc. in China. There's no real large digital powerhouse here in Europe. It's not necessarily a negative thing, but it's an opportunity for banks to come together.
And if you then go back to that point I think Nigel was making on focusing on APIs as a technology focus, which is a bit what you're pointing at right now as well on the developer portals, and the customer experience of the APIs and the real touch points there. So what's Token doing in its space?
Sure. One of the things that we're very keen to do is to make sure that it's easy for a developer to connect to Token, to build to our API, because we go to banks and say we have critical mass. We have all these developers who have all these products. If you connect to our one API and then expose that to the world, you're in turn offering out all these new innovative products. The future, as we see it, our vision, is that the banks and the innovation can still continue internally. It can still be bespoke for customers, but to truly play to what the market wants, as in the digital natives of the future, and well, they're here today, they're in the workforce. They want their banks, they want more from their banks. So our solution, it's easy line of code to connect to if you're a developer. We have a sandbox, it's open to everyone right now. We're connected to banks all across Europe, over 4,000 banks. And it's that reach that's truly compelling for not just the developer side, but for other banks who want to behave like an AISP and a PISP. Sorry to go into the acronyms, but essentially, if you, as a bank, and have customers who multi-bank, meaning they have other banks that they put their money in each month, you can actually convince your customers now to use your app as the base app and aggregate all the information to give your customers a true view of liquidity. That's just one interesting use case that we're working on right now.
Which nicely ties in with what we discussed in the open banking roundtable indeed. Who is going to own the customer? Who brings that best user experience, aggregating all the information, leveraging the APIs behind? And who's going to be just a provider in the back? And that's the battle that we will see.
Yeah.
The coming years, that's basically...
On that, who owns the customer? I think the customer owns the customer. And I think we're going to see that not through necessarily marching with their feet. Everyone is guilty of the deadly sin, sloth. People aren't necessarily changing their insurance provider. They're not changing bank. Despite all the things like in the UK, there's the current account switch service. It's seamless. It's easy to change bank accounts, but people just generally don't. And if they do, they change to an entity that's owned by the same parent bank. So they're slightly redundant.
I wouldn't fully agree with that. People do change banks, but out of sort of laziness, which is misplaced as loyalty, they stick with the old bank as well. They can't be bothered to transfer, but they start leveraging the new bank for all the main interactions. So I would argue it's a bit of both there.
Yeah, it's kind of like how people are credit scored in each country. It varies by country, and often it's how long are you with your bank, which is kind of ridiculous. It's like KYC. I heard a great fact earlier on that the KYC standard, knowing your customer standard, that every bank uses, was created in 1918. Things have moved on. It's 101 years. But anyway,
I think that's a good closure
segue
of this discussion. Thank you.
Thank you very much, and it's been a pleasure. All right, so round of applause. Thank you very much. So next up, I believe we have Mehdi. Here's Mehdi. Welcome to the stage.
Thank you very much.
Thank you,
everybody.
So, did I murder your name, Mehdi?
Yeah, Mehdi, or Mehdi if you have an Arabic accent.
Okay, Mehdi.
Yeah, both works.
Yeah, all right. Okay, well, welcome to the stage.
Thank you
Can
very
you
much.
tell us a little bit about yourself and also API Days? Thank you.
Yeah, so my name is Mehdi Medjawi. I'm the founder of API Days conferences. It's the series of conferences like this one, great events, where we talk about APIs, the challenge that APIs are bringing for business and for IT department, right? So we receive 10,000 people every year in our events, and I'm here to represent API Days. Just on the side, I've been a chief API economist for some software vendors, understanding the impact of APIs, and I'm currently European Commission experts on, let's say, public sector API governance and monetization. Over 2 years, it's a big program. But yeah, a lot of things are coming. And last thing, but I write every year a report of banking APIs the banking API state of the market since 2015, and we've seen a lot of things changing in that space. And we've seen token coming too, right?
All right. Thank you very much. You said you're really active in Europe right now. Can you just give us maybe some of the, not necessarily highlights, but some of the key projects you're involved in that would be of interest to a group of bankers and technologists in the crowd?
So there, as I said, there is the European Commission project. There is some monetization project with some banks or even like other type of industries. But I'm also here to say one thing about APIs, right?
Sure.
What I call the API mindset. The first API was created in 1968 when actually we wanted to reuse software amongst many hardware, right? So we said that we need an interface to make other program being interfaced with the same hardware, right? So that was the first idea, the same software with as many hardwares as possible, right? And this is the same applying with companies right now, right? If you do a great software, if you abstract the whole industry like banking, like you're doing as Token, you can deliver the same software, but not to hardware, but to whole companies, right? And this is why company can scale, right? This is why company can completely scale. And so I work on this kind of project, helping companies to achieve that. But and the token story really inspires me about also what other API companies did. One example is Stripe, you know, the payment API, Stripe. At the time when Stripe was launched, all banks of the world had payment services. All banks of the world had payment services. But the one who really understood the power of APIs, the power of decoupling the interface towards the business, decoupling it from the IT towards the implementation, was the one to win the heart of developers, and that now worth like $22.5 billion, right? Almost half of the top major banks worldwide, right? So the API mindset is really what I try to help companies to get. Bigger organization, because if you have the API mindset, you can really scale, because the interface will not change, right? Interface will not change. Amazon CTO Werner Vogel say, code can change, APIs are forever, right? This is how you build an infrastructure. And when you have this idea, you can build business that really scale in what I call the programmable economy, right? And this is what you're doing at Token, right?
And that's what we're doing at Token, yeah, which kind of leads us in. I think it's great to hear someone talk so passionately about APIs. My wife is sick of me doing it right now. Actually, everyone is. But I will say that passion we totally share with you at Token. What we're doing at Token on the programmable money side of things is that smart token technology helps you know that your money's going to get there securely. You can put timestamp, but you can put your identity and the data all packaged into one. But one of the things that we're seeing as a differentiator, in the future anyway, is not just to comply, but to compete, move beyond compliance. So I mentioned this earlier on in the previous session, but the premium API, this is something that, because of regulation, PSD2, while it's great, you know, it doesn't stifle innovation. It collectively moves the banks forward who don't necessarily want to innovate. What we're noticing is that a premium API is required. Now, there's two sides of the coin there. One is the premium, you can charge for premium because it moves beyond the compliance feature functionality that the regulator tells you you can add. It's also an added value to the customer, and we're really exploring what that can be. For example, richer data analysis for the customers, and then richer data that they can pass on to new marketplaces beyond banking. Have you seen any interesting use cases that you're working on, or?
Yeah, and this is what Reid Hoffman, the founder of LinkedIn, called blitzscaling. So blitzscaling is a mix of blitzkrieg, like the German strategy to take over position, military position, and scaling, the idea of like leveraging, let's say, leveraging all networks effect and money leverage to actually have impact, right? So blitzscaling is the ability to take position really fast on the market because you own customer attention, because you have integrations, because you have a bigger ecosystem, right? And then you will collect value later on that. So this is why companies like Token raise money, right? Yeah. To blitzscale, like to take market position. And once you're integrated with 4,000 banks, I think you are, 4,000 now. So the next one, it's obvious. They're not integrating with one startup. They're not integrating with one platform, they're integrating with one ecosystem, right?
Yes.
And now you need to be in to surf on the wave, right? This is on your homepage, right?
Yeah.
So this is really the idea of blitzscaling and why all these companies, Token, Revolut, N26, all these companies are raising money fast, right? And so my message here is also for banking, for corporates. You need to understand that culture, right? You need to understand that culture because it's a phrase from Paul Rohan, which is an expert on open banking, but he said, banking was product versus product now. It will be platform versus platform, and soon it will be ecosystem versus ecosystem, right? There are too much banks, right? Bill Gates in 1994 said we need banks are dinosaurs. We need banking. We don't need banks. We have still a lot of banks, and they are powerful more than ever. But still, there will be agglomeration. There will be concentration, and companies were able to be a hub, right, of integration, and the core of the ecosystem will be the great winners. They will accumulate the value.
To that point, it's kind of, right now it was, the old style banker was me shaking hands with you, winning over hearts and minds, you put on your best suit, you get the loan. Then suddenly it became, computer says no, the underwriter is a machine, it's an algorithm. Eventually it's going to become machine talking to machine. But even for a machine to talk to a machine, there needs to be a secure, swift, easy to use API in place, and we believe that's in line with what you're saying. But one of the interesting things that we're noticing as well is that it's all well and good us having this privileged conversation up here talking about future and technology and how we need to go cashless. You'll hear in other discussions. But every bank moves at its own pace, and each regulator moves at its own pace. Every country has its own regulation. There's other activities that are possibly more important, people are saying, than our discussion up here today. But this legacy infrastructure that was built pre-internet, it's been touched upon. It does work. Let's not say it doesn't. But customer expectations have changed. You know, shouting from the rooftops in Brussels that we can now transfer a payment in under 4 hours, it's not amazing. You know, it's not going to blow your mind, especially when I can just post something on Twitter and it's there right now. It's instant gratification, and I think the future, it's here today. You know, people often say that the light bulb was not created through the continuous modernization of the candle. We're not saying that everyone is trying to modernize the candle, but they're definitely trying to put internet solutions on top of pre-internet solutions, and that's a problem.
Yeah. And often I often resume that we are in a world where in most of the banks, most of them, when you want to wire money from Europe to USA or from Turkey to Asia, right, it's still faster to take a luggage with money inside, bring the money there instead of using your bank to send the money, right? Sometimes it takes 3 days, right? Still in many banks, actually my banks in France, it's like that, right? No, so we're still in this world, right? So banks need to understand that, yeah, consumers have changed. APIs are really the key of the distribution in the programmable economy. People will come in self-service, right? So the last mile to the application, the last mile to the ecosystem, actually you don't need to spend for it. People will come and integrate with you, right? So you reverse the thing. The last question that I will let for later, but it's like, who integrates who? Who integrates who? And actually, the people will integrate with the one who have the best API, where the effort is the less. So invest on the API mindset.
I 100% agree with that last statement.
Yeah.
The easiest API wins.
Yeah, thank you very much.
Thank you very much.
Thank you.
Thank you.
We can applaud. And we have our next vote, Michael. Welcome.
Oh, thank you.
Welcome. Please introduce yourself. And we had a great discussion about market position, taking value in your distribution, right?
Sure.
So I hope we'll have a great discussion about investment. But yeah, please introduce yourself a little bit.
Sure. I'm James Dickerson. I'm the partner who leads the banking and payments portfolio at Motive Partners. We are essentially a stage-agnostic investment vehicle exclusively focused on fintech. We have a private equity fund that is focused on growth equity and leverage buyouts. We have a venture fund, which is really focused on venture stage businesses. And then we have an incubation vehicle where we participate with the industry to collaborate and build innovations together that we can scale through our investment platform and participate in the life cycle of that business. So we're really investing at every stage of the fintech investment life cycle. We also enable our members, so the financial institutions who participate within our vehicles in some way, access to the portfolio, access to the incubation vehicle, and a number of the other things we do. So we're kind of a full stage investment platform. I suppose pertinent to the discussion today, in my previous life I ran Accenture's European open banking business, and I sit on the advisory board and I'm a personal investor in a number of early stage fintech companies that of course are all looking at open banking in some way.
Yeah, so open banking, where I should invest?
I mean, great question. I mean, if I had that answer, then maybe I wouldn't be here today. I'd be on my yacht.
Usually it's investors who ask entrepreneurs information about the market. So now it's our time, right? Where do we invest?
No, I think the thing about open banking is what we're seeing is what I call the great decoupling, right? What we're seeing is the product manufacturing engine of financial services being decoupled from the distribution side. So if you think about it in that systemic way, what we're seeing is a large number of new customer experiences in terms of vertically integrated customer experiences on the distribution side, and then of course the big tech players coming to play and distribute multiple products. On the product manufacturing side, we're starting to see a significant need for a number of utilities. And this is where we're actually focused at the moment, which is looking at where large cost takeout can take place in incumbent institutions through fintechs coming in and providing a service to some of the incumbents. And then where I think actually there's been a tremendous amount of value creation is in the middle, the glue. And we've met a number of the people here today, Token, et cetera, that are providing that interoperability layer between the incumbent institutions and these new distribution players, whether they be AISPs, PISPs, or whatever flavor it is. There's a huge amount of value being created in this glue area. And I think a lot of investments were made to date. I mean, you see, Token, Railsbank have always, raised large numbers, large figures. But I think what we're actually starting to see is now the second wave of these interoperability layers and people putting over-the-top services on top of these aggregated API platforms and doing things like categorization of spend, discretionary spend identification, income verification, credit scoring, et cetera, on top of that. And these are the value-added services that sit on top of this glue that are then being provided to these distribution plays. And that's where I'm starting to see a lot of value being created at the moment.
So what I see, you may share that with the investor point of view, I see really two parts. I see people trying to disrupt the consumer experience, right? With the glue inside, the APIs, right? To deliver banking to consumers, right? Soon to corporates. But I see also companies trying to attack the ledger, right? The banking ledger or the core technologies, right?
Sure.
And I was talking to a bank CEO recently who told me, maybe he was tired, maybe he was visionary. He told me, as long as we have the ledger, and as long as we have the credit capabilities, we are not afraid of open banking. We can let that to startups, right? It's fine.
Sure.
As long as they are not able to give credit, which is really the core banking with the licensed authorities, we are okay. It's not shared amongst all the banks, but do you see with your portfolio, will you invest more on people disrupting consumer, or will you also invest of people attacking the true core value, which is the ledger, the core banking, and the credit capabilities?
I see it slightly differently. We largely don't participate in the distribution side. In terms of competing for consumer or client eyeballs, we don't have a huge interest in that space. When in corporate and capital markets we do, but in traditional retail banking, no. It's such a crowded space. I think big tech are coming to play in a significant way. As we all know, they're knocking on the door of financial services pretty significantly. Where we are focused is in this product manufacturing layer, whether that be the ledger, whether that be the credit decisioning, whether that be risk, AML, KYC, that's where we participate. And we actually think there's a huge amount of value sitting within this part of the business, because if you look at the way the cost base of incumbent institutions are set up, 60% of the cost base across most of the industry is common. They're running the same processes across the bank. And in no digitized industry does that really exist. So there's a large opportunity for the banks to start to mutualize that cost base by pushing out the door into utilities. And actually that's where we think the huge amount of value is still.
So there is a huge value for investors and startups. But if, let's say, credit decisioning is made by one-man actor, which is one of maybe company of your portfolio.
Sure.
If KYC is made by one-man actor, right? How banks can differentiate if they all have the same bricks to build their banking stack?
You're right, and I think that is the big challenge for incumbents. And incumbents are being squeezed on the front end, on the distribution side, and then they've got big tech and all these new fintechs cutting out bits of the value chain that they might have seen as competitively differentiating. And you start to think about the universal banking model, and trying to compete on every front is now impossible. So increasingly, we're seeing lots of banks retrench, and they're retrenching back into core services, and they're focusing on particular areas. And what they want to do is deliver a highly differentiated service in a number of core areas, but not giving a full service opportunity like they used to. And they'll use partners to offer the rest of the services to their clients. And I think that's the future of banking. Nobody is going to be delivering one thing to everybody, right? Or sorry, everything to everybody, right? It's going to be a mixture of players, like the Starling model, where you might get your current account from Starling, but then you have Pension B offering your pension product and a wealth product from Wealth Kernel, whoever it is, and it's all wrapped up. Now, Starling owned the distribution, but you're getting a 9 out of 10 business model from all these other players because they're API'd in. And I think fundamentally that's the way in which banking is going to. Nobody is going to deliver a 10 out of 10 customer experience on every product and service line. You're going to have to partner, and the technical mechanism to do that is an API.
So today, for the 3 minutes we have, what would be the 3 KPIs, or what would be the 3 aspects you see in a startup that comes to you and say, I want to be funded by you to tackle the banking market? What are the 3 main characteristics that you say, oh, that makes a potential great company?
It's a difficult question because it is highly nuanced, and depending on the stage of the business and the space they're operating in, you'd look for different characteristics.
For a Series A.
For a Series A, okay. So a private equity deal, you'd be looking at financials and management team, and a Series A product market fit, traction, and probably more importantly, the management team as well. The earlier you are looking at a business, the more you're looking at the individuals within the business. Because when you're at the early stage, you're making so many pivots, and what you're actually doing is backing the resilience and capability of the management team to take themselves through this rather complex journey. No startup grows in a linear fashion. No startup ever hits their number. They're either way above, way below. So what you're actually doing is backing, i.e. the individuals, the product itself, and how well fit it is to the market. The problem with the space that we've been talking about, open banking, is that a lot of these companies that are here today, and we've been speaking about, I've been trying to hit a moving target. This market is still evolving and has been for the last 5 years. Everything from API specifications to the regulation itself, we're still not even live until later this year, technically, right? So it's a very hard space to judge from a product perspective. We know there are some right products, but the market is moving at such a pace that some products that perhaps were built last year may be stuck in legacy if the market moves too quickly. And actually, we're looking for the second or third phase of fintechs that are coming through to address open banking, rather than the early movers, because we actually think some of the early movers may actually be disadvantaged from moving too quickly, and actually the second and third tranche will actually be the ones that win, learn from the mistakes of the early movers, and capitalize on the opportunity as the market really starts to form. Because we're still in an embryonic stage. Open banking has barely even started on the journey, right?
And to your mind, how much the API mindset is important in a founder's team when they're early stage, when it's part of their distribution strategy?
So the way I always describe this is that banking was branch first, and then banking was desktop first, and then banking was mobile first, and we're in this transitional phase of moving banking from mobile first to API first. It is fundamentally the core of the way in which these organizations need to operate, and increasingly, both incumbents and fintechs need to look at the API channel as the channel, right? That is their main form of distribution. And if you look at this broadly as an industry, this has already happened in telco, this has already happened in travel, so this is not a fundamentally new concept, right? Businesses and industries have moved in this way already, and I think banking could take a little bit of a look back and look at what happened in the telco space and think about how they can leverage this opportunity through building a new revenue stream through these APIs. There's an entire revenue pool amongst these developers that they can access if they build the right products and services to engage the developers in the right way to help replace some of the displaced revenue from their traditional customer base on the front end of the business. So APIs inherent in the future of banking.
Yeah. Thank you very much. It's my time to leave the stage. It was a great discussion, and see you later if you want to talk. Oh.
Great.
Thank you. Bye.
Thank you. Cheers. And I'd like to invite on stage everyone. Welcome.
Peter?
It's working.
Yours is? Okay, there we go. If you could just spend a couple of minutes introducing yourself and telling us about what you've been up
sure. My name is Evren Şahin. I am the head of digital banking at Yapı Kredi Bank, which is a joint venture of Koç Group, biggest Turkish conglomerate, and the UniCredit Group, Italian UniCredit Group. I work in digital transformation of the bank, Fintech collaborations, digital service design, and I also do run a startup engagement and acceleration program at the bank.
Great. And what I suppose, what have you been your most recent project around digital transformation? How have you been driving that within the organization?
Yeah, maybe to give a brief idea about the Turkish market. Turkish market is pretty innovative actually on the digital banking side, and as a whole, it's pioneer on digitalization since the beginning of 2000s. And I see the digital transformation as a continuous effort in our market, and we see some eras due to some reasons, some milestones happen on digital transformation. What we have seen at the beginning of 2015 in the Turkish market, a few facts and trends created a new era that leveled our digital transformation, also in Yapı Kredi up. We've seen a few facts like exponential growth on the mobile in the market, like customer experience becoming really important, and customers really care about it, like paperless processes being adopted more, even in the branches, like biometrics picking up, payments without plastic cards picking up. So at the beginning of, fintechs are rising up at the beginning of 2015. We've seen these facts and trends, and we said that we need to level up our digital transformation to comply with all these trends. So we have created a new level of digital transformation at the beginning of 2015. Also, regulation affected it. We have had a new regulation at the beginning of 2015 in the Turkish market, which enabled us to sell products from remote. So that made us to put digital banking onto the balance sheet. Before that, it was all about being efficiency, it was all about being cost cutting, but at the beginning of 2015, we said that we are putting these as a revenue on the balance sheet. So we we designed a new concept on our digital transformation, and we called it as a mobile as the remote control of the bank. Because we've seen that omni-channel, multi-channel, these are concepts that the bankers are making up. The customers only care about the most convenient channel. And with that trend, it was becoming mobile, and we said that we need to build everything around mobile. We've designed an ecosystem where mobile remotely controls everything. So you don't use your plastic card, you use mobile to withdraw money. You use your mobile to pay with your credit card. You use your mobile to directly connect the call center agent, even if you need. Even you use your mobile to take a priority queue on the branch, even if you need to go there. So we've seen this, and we have also seen that the paperless adoption, we have also applied the similar digital transformation on the branch side. The implications are like this. 80% of all cash loan applications on the branches are without any paper, just within 5 minutes. It was like half an hour, it was costing us 70 papers, signatures, faxes, whatever it is. On the digital side, we are selling more than 50% of the loans only through mobile. So we are doing like 95% of all non-cash transactions through our digital channels. The implications are big, but we also see that, as I said earlier, there are new facts and trends. They're again changing the era now. An era has ended, which was about transforming processes, transforming customer experience. transforming customers, migrating customers. Now we are in an era in which we need end-to-end digital services, where customers, millions of our digital customers never visit branches in the last 3 months. We need to serve them in an end-to-end manner. We need to dive data more, and we need to improve our digital channels from self-service to proactive channels, smart channels, digital assistants. So we have developed, for example, a project recently, first in Turkey, a completely digital onboarding service with video authentication, which will also enable our regulators change the KYC requirements. So it is not like regulators always create the biggest burdens in front of us. If we develop new customer experiences and if we show it to our regulators, we've seen that they really understand it and they really open the gate. That's it.
And where do you see Turkey is positioned in terms of an opportunity or a threat when it comes to new entrants coming to the market? If you look at number 26, Revolut, and some of the other challengers, how do you see Turkey versus some of the other European markets in terms of a place for them to come and play? And how do you, as an incumbent in the market, retain a defensive position, or do you take an offensive line and attack the space they're going after? What's your view on that?
Yeah, very good question. Actually, what we have observed so far in the Turkish market, fintechs or the alternative players haven't been a big threat for us as compared to some of the European countries or US or China. The reasons for that has been what we have observed, that especially the Turkish banking market, the big banks are pretty strong at digitalizations, especially the top private banks. They always try to innovate around digitalization. They always try to do fintechs, and they do have big in-house tech houses, big IT teams, big innovation teams, big investments on this. So it's one of the reasons for this is that the banks have already been strong around this. The other thing is we didn't have the similar regulations like PSD2 so far coming into the market, but we're seeing that the regulator is starting to talk about this, and the next year we'll most probably have a chapter around open banking coming to Turkey. And we will see more fintechs, especially on the aggregation part and the platform part, trying to become a challenger, but it's always hard for them also, because the same regulations are in front of the banks. And if the banks are the first movers and they do own the platforms again, it's going to be again their ecosystem. And maybe the best part is the partnership with between these two. The banks will have platforms in Turkey, I believe. And fintechs can enter into these platforms with their services, with their platforms. And I'm sure that banks will also provide their services in other platforms. If some of the fintechs can innovate around some advanced technologies and can create better interfaces, better customer experience with that technology in their platforms, I think banks will eventually be happy to be in their platforms. Sure. But I believe the fintechs should work and innovate around more advanced technologies. In the Turkish market, if you go around like digitization, customer experience, or becoming intermediary, it's not an easy market to battle with the incumbents. Sure. You need to find something around the advanced technology like machine learning, like data analytics.
And just a quick final question. I think everybody tries to pin open banking to PSD2. For me, open banking is a much broader term. It's more about the transformative shift from a single channel banking model to a platform banking model. And it's really a global phenomenon. We know Australia will go live with the consumer data right in June. Israel, South Africa, Brazil, Canada have all got pieces of legislation coming into play. And now I know Turkey doesn't, but it sounds like you're still very much focused on the digital transformation piece, but you haven't really embarked on your API journey yet.
Yeah.
When do you think that will come about, and do you think that will be regulatory driven, or do you think you will proactively move that way anyway?
Yeah, some of the banks in Turkey, including us, have tried some sandbags to see that we do run a startup program, and we wanted to just catalyze the fintechs or some of the startups with our APIs. But so far, what I observe is in the market is the traction is low. There aren't many cool, innovative solutions out of these API integrations. One of the reasons is since the regulator didn't still force the banks to open up as an open banking concept, the most fruitful APIs, whatever the fintechs did with the sandbox doesn't make much of the really worthy things. One side, I believe the regulatory part as the part in PSD2 should definitely be in the equation to really catalyze and drive this. Another part, as I said in the previous question, the fintechs in the Turkish market should also try to focus in some advanced areas where they can really differentiate and they can really convince the banks to open up some of the APIs, even not the regulator is going to enable. That's what I believe for the Turkish market.
And I think that's time up, but thank you very much.
Thank you very much.
I'll leave you there.
Thank you. So the next speaker for me is Peter.
All right, thank you very much.
Welcome.
I don't think I'm going to look as good on the panel up here as my prior guest. How are you doing?
Welcome to the stage, Peter.
Thank
Can you
you.
a little bit introduce yourself?
Yeah, sure. Hello, everyone. It's a real pleasure to be here in Istanbul. My name is Peter Neufeld. I'm a partner at EY. I look after our digital and customer experience capability in EMEA. And for the last few years, I look after an acquisition that we made in the UK of one of Europe's leading service design agencies, so focusing on customer research and insight to drive the better application of technology to the needs of people as they make financial choices in their life. And the real focus of the group that I'm working on, we've launched a challenger bank in South Africa. It's the first behavioral-based bank that's going to help people manage their money more effectively. We're working in a Mediterranean country to launch a new challenger proposition. It'll be a mobile-led consumer and SME a provider of financial services. We've supported the launch of Kakao Bank in South Korea, which took a messaging platform and in 1 week signed up 3 million users to retail banking solutions. So a lot of the focus we're taking is both to work with challengers as they enter into the market to consider how they can achieve scale, and then to work with the large-scale incumbents who are looking to transform themselves to maintain competitive advantage in the market that's really evolving so quickly.
Oh, great. So my first question to you is, can you a little bit talk about the current ecosystem in UK, fintechs, incumbents?
Sure.
Are the fintechs outperforming the game, or these two are the complementary?
Yeah, the question is what we mean by the game.
Yeah.
And I think that's an important observation to make as I think about some of the other panelists. We can talk about APIs, technology, machine learning, AI. We can talk about the developer experience, which I think is really, really important. The ability for people to work with technology in new and better ways, to launch services more cost-effectively, and more resiliently is going to be very critical. However, I think we talk about customer experience as if it's something that's pre-existing. And I think what I see in the market, and I kind of break it into three broader categories. I would say on the one hand, we've got fintechs, which I would include in their challenger banks that are driving new market propositions to customers. You've got your incumbent banks, and then you've got digital incumbents, the Amazons, the Facebooks, and the Googles of the world that are really highly relevant in the financial lives of consumers. But we often leave the customer experience behind. I think a lot of times we sit in a room and we design something for a customer. We don't bring them into that process. And the most successful work that I've been involved in and that my clients are involved in, one of the things I'm really passionate about, is how we help organizations turn insights into solutions. How do you bring real humans into the process to help you co-create and evolve the design of the solution that you're building? I mean, we talk about, in response to DevOps, we talk about insight ops. How can we bring customer insight research and testing into the development of solutions? And I think, 3 years ago, if you were in the UK, the fintech investment was overweight in payments. I think today you see insurance and savings and investment taking the lead alongside payments. I also think you see an environment where, a challenger bank 3 years ago might have thought they were going to take down the HSBCs and the Barclays of the world in a knife fight for the current account in the UK high street. I think today they realize getting to scale is really, really hard, and they can achieve scale through collaboration with banks. Also, if you're a challenger or fintech, you need investment because you're not making any money, frankly, right? You're paying for growth. You're paying for scale. And who better to invest in you if you're Atom Bank than BBVA? And I think that conglomeration of banks learning from challengers, bringing them closer is quite interesting and quite critical. So I think there's a lot more collaboration and cooperation. And I think the market's overweight and heavily occupied. I think there's going to be fewer challengers and fewer fintechs in the future.
Yeah, speaking of collaboration, I would like to also add a few words about how we collaborate at Yapı Kredi with the fintechs and the startups. Actually, we do run a two-legged approach in which we continuously scout potential startups on specific areas in the new era that we are looking for, like API services, like machine learning, like advanced analytics. And whatever we scout, we try to integrate those solutions either through classical methods or through open architectures in our bank or in the Coach Group or the UniCredit. The second phase, we do run an accelerator. We call that Yapı Kredi, in which we try to catalyze potential, we try to nurture potential startups and fintechs in the market. We do give them sandbox APIs, we do hackathons. We also run an accelerators right now. We have like 5 startups in our accelerator. We try to find solutions, we try to improve their solutions to fit into our market, not only for the Yapı Kredi but also for entire ecosystem. So again, turning back to you, what challenges do you see in front of the API initiatives or the open banking concept as a whole?
I think the thing you've got to really look into is what people actually think about their money and their financial life. We do a lot of research on what consumers think about open banking, PSD2. When we do this research, we do qualitative interviews, we do diary studies, more ethnographic style research. Most consumers in the UK, when we asked them what PSD2 was, thought it was a new robot in a Star Wars movie that was coming up. So they had no clue about what it was. When we told them it was going to help them make payments more effectively, they were a bit confused about what that meant as well. They felt they knew how to make payments. They have cards in their wallet that work perfectly. They weren't really clear on why they needed this. When we talked to them about open banking and how banks could now share and access their data with their permission, they also got quite nervous. Most consumers don't know what we're talking about when we talk about data. Is that my daughter's birthday? Is that my home address? What exactly is the bank sharing? How will it share it? Will it be secure? And then they get really concerned they're going to be inundated and brandalized with undifferentiated offers that benefit the bank but have no value for them. So consumers are really, really skeptical about the benefits that open banking, PSD2 are meant to provide them. And I think that's a real wake-up call. If you're a fintech or an incumbent bank out there, you need to think very, very hard about how you're going to help that consumer who chooses you in a very crowded marketplace over all of your competitors live a better financial life. Because when we started talking to consumers about the benefits they might get from it, will it help me pay my mortgage off more quickly? Will it help me save to buy a home? Will it help me manage my debt more effectively? Can it help me save more? Can it help me run my business better? Those are the questions they start leaning in on. They want to understand more about that. And the only way to get at that is to really understand them very, very deeply and work with them very, very closely. If you talk to the CEO of Tide in the UK, an extraordinary success story in fintech, SME proposition. Somewhere around 20% of new accounts for small businesses are opened up on Tide. They focused in on time. They made it exceptionally easy for a small business owner to get the information they needed to make payments and accept invoices instantaneously. A progressive KYC, AML in the background process. Their customers in interview sessions that we've conducted, we give them a sign that says, I underscore my bank. And we ask them to fill in that blank. And you can imagine what most people write in that blank between I underscore my bank. Tide customers drew hearts. They're like, I love my bank, I heart my bank. My bank helps me run my business, provide for my family, be successful, get recognition in my peer group. My bank gives me time back and makes it easier to take care of my finances on a Sunday on the couch so I can spend more time with my friends, my kids, at the golf club. Maybe I can spend more time with my customers, my staff, my employees. Tide, they really understand how to take that insight about what that SME needs and wrap everything they do around it. Do they have smart technology? Yes. Do they use APIs? Of course. Do they have great developers? Absolutely. But that's table stakes. If you think that's how you're going to win, you're going to get outpaced by people who can fall in love with their customer authentically, and the customer mirrors that back.
Thank you very much, Peter. This is the end of my stage, so thank you very much.
Right on, man. Thank you very much for the questions. Good.
I call the next speaker.
Nice to
Thank you very much.
Yeah, Murat, come on up, man. How are you doing, dude?
Doing
good to see you.
Let's go for the closing.
Where's that guy that said his innovation goes to die? He needs to come back up here and apologize to my friend here. I'm just kidding. I'm just kidding. Listen, you know, innovation functions and working with fintechs as an incumbent like you are, I'm sure you face into a lot of challenges. How do you manage IP, multilateral NDA? How do you accommodate new ways of working? It seems to me there's an extraordinary number of challenges that you've got to face into to get it right. How do you balance those challenges with what AK Bank sees as the opportunities of engaging with this community of entrepreneurs and advocates for change?
Definitely, for sure. We are working closely with the fintechs and startups. Actually, even they are major that we work for. We got many actual challenges that we have come for, and also we have seen many opportunities as well. I think the opportunities is actually much wider and bigger than if you compare for the challenges, for sure. And if we go for that opportunity part, the beneficial that I call it, what's the beneficial that we got? Because the fintechs are the experts. So they're experts in their areas. Like it could be on biometrics, it could be on modeling, it could be a different area. So you have to leverage these experts, and we have can able to get some new approach and like new technologies that can be able to utilize in our models, in our processes. So it's the main key actually driver that we get see as this is the opportunity. And that all these things get into a new products and differentiated products, and that we call innovative actually services that we see in the market, and it really creates a differentiation. It helps you to have a first mover advantage as well. So this is the output part. And apart from the actual scope and the output, it's really the value that we see. And apart from that, in terms of the culture, the way of actually making things happen, also when you have approaching to the problems, also when you're approaching to the solution, and you get something new, you can just leverage from themselves, and you can able to understand and learn it. And also you can value for also your internal clients as well. So this is the good part that we see. But if you go for the challenges part, I think it could be much, but as I just mentioned, when you verify, it's something like a tiny that you can able to struggle. So these are the things that I see. Like there are some time zone differences problems that we see when we have some projects with US or like, let's say Asia.
Yeah.
So it's like up to 8 hours, so it's something like a struggle. And because the cultural difference is actually on the table, so sometimes there are problems about understanding the problem, not in the same way, not in a similar way. So there should be some long discussions to understand, and it will take some time. But apart from that I just mentioned that these are the tiny pieces that you can handle. I think the critical problems comes after about intellectual property rights, like some NDA problems. And also they don't have so much capital. So you can do some investment for a long shot, but they don't have. I think these are the things that we have seen so far. So it was the thing that also, whatever the challenges are on the table, it's also worth to work with the fintechs that can really create new products and services, apart from all the actually investments that we done and all the challenges on the table. So if you will call about the fintechs, when you're talking about the fintechs and about the UK market, could you give some good examples that you see in UK or also in global with fintechs and banking, the incubators together?
Yeah, well, I think if you look at the open banking work that some of the large incumbents are doing, you see really interesting partnerships like HSBC working with Bud. You've got Thought Machine and Lloyd Banking Group coming together. I mean, you're really seeing organizations that have developed a more progressive way of building sort of single-threaded development from the experience layer right down to the infrastructure that can be done in parallel with other activity and the efficiency that gains. And I think a lot of the incumbents are looking to learn and apply those capabilities, that understanding of technology delivery into their own organizations. And they've got a big cultural change barrier they've got to overcome. So if you look inside the CIO, CTO organizations of the most large banks, you've got an aging leadership. They're maybe 5 to 10 years out from retirement. They've lost that kind of mechanical sympathy for how the car works. They don't really have the full comprehension of advanced technology coming to play and the benefit it can provide. So there's a bit of a red card around cynicism, a bit of a red card around legacy. And I think there's an attempt through these engagements with smaller, more nimble, more advanced, younger, less technically indebted solutions to help put some life back into and some new thinking back into organizations they look to transform. At the same time, though, I think when you look at some of the most advanced and celebrated fintechs out there, it's not as if they're unhinged, they're unburdened by legacy. They create technical debt. They create technical burden that they've got to resolve at a later point. Part of that's the drive to launch product into market very, very quickly, very, very aggressively. But you know, I think what's interesting is that when I think about a Tide or I think about Loot, which Loot launched a very, I think a very awesome example of a well thought through app for young people to help them save money and encourage them to put money aside either for a goal or just for the end of the week. So it was designed for students. Really, really well thought out about changing behavior through mobile phone engagement, because we all know we look at our phones on average 3 times a day. Capturing some of that engagement, our financial apps rather 3 times a day. We look at our phones about 250 times a day, but capturing that engagement and using it for something else, really into the behavioral insight, the research and analytics, the tap metrics coming out of the app to modify and expand it. And I think that evidence-based development, that research and insight-based proposition design is really where the learnings are coming alive. I think if you're an incumbent bank and you're looking to drive that out, rather than launching 150 features for your new proposition, you go through co-creation and research and you narrow that down to the 5 or 6 that really matter to your consumer. And that gives you more confidence in applying that.
Actually, in terms of how the banks are going on and how the actual trends are affecting and how can I say, also the Turkey and EU banks actually acting to this actually innovation point of view. I just want to mention some closing remarks.
Yes.
In terms of that, actually, what we see, actually, also we talk today so much about it, is actually ecosystem game. So this is the ecosystem management will be like crucial when the banks will think about open banking. Then open banking is something like enabler that we can see. And also the blockchain is actually another thing that we wanted to mention about it. As a technology also, it will create valuable outputs in the end. And apart from that, what we will see as actually open banking world, that we will see new aggregators in the market. It will be also live and actually in the UK, and it will come also in the regions apart from UK as well. So what could be the services that we leverage from those? Actually, what we will see actually the account informations and also payments, and so like money transfers. So it will be all in the market as well. And apart from the open banking that we discussed all today, the intelligence systems that I see is so crucial. And as you mentioned before, that how the banks actually focusing on, what are their objectives? And the things is, actually, if they wanted to have better marketing services or sales services, have like targeting services, they can able to utilize these technologies to have much better value in the end. And it could be also go for the collection parts, or it will go for credit purposes, or also some deposit purposes as well. And what we see as like a new thing that banks should to focus on, maybe not so much, is actually external data that I see actually until now. So it will be valuable even to have some much better modeling and to know the customer much better than us, that we can say. And last thing first that I put on it, actually the banks are getting in much conversational banking way that I mentioned before, and also the banks will put some smart banking ideas and insightful and delightful content in it. And then the customer sees that, yes, this bank knows me much better, having actually serving much creative products in a better way that actually is something like a humanized way that until see now.
Well, I love it when you talk about conversation, because I think conversation design is the next channel. As we think about the impact AI and machine learning are having, what does that really mean, right? That means that, that now and into the future, you're going to have immersive voice experiences with machines that sound and feel like human interaction. You're going to be sitting at home with your partner, your kids, your wife, whomever it is, talking to a device in the air while you sit and look at your mobile phone to make a financial choice on a mortgage, on savings, etc. I think that immersive voice experience is going to be incredibly powerful, and the way we design and think about encouraging consumers to use it in a better way will make it even an exceptional opportunity to engage in financial life like we've never done before.
Thank you so much. So before closing the remarks today, really thank you so much, Peter. As a summary of what we have heard today, all the day actually, the customer needs innovative services. Customer needs some flexibility. And these things actually that they require some really infrastructural change among the banks, also utilizing the fintechs as well. So the main highlights that we see today, actually the open banking will be hard at actually that we put actually bottom. And on top of it, it's not just the collaboration of the banks and the fintechs, it could be banks and the banks, banks and the developers, and all the third parties as well. So it will be really crucial. And on top of it, there will be new services will be built, like aggregation and other actually third-party services that the customer will be leveraged from. And one actually good actually word that I hear today, the API mindset. So it's really important with also culture of actually the bank, how to actually behave these kind of opportunities, utilizing their APIs as well. And if you just think about it, there was another thing actually good, as said, it was mobile first, it was also the strategy also of Akbank. Now it will go for API first. I think it's really crucial. So I just thank you for all the attendance and the participants today. Thank you so much.
Thank you
and
very
I appreciate
much.
it.
Thanks, Murat.
Thank you so much. Have a nice day.
Innovation goes to thrive.
Thank
you to our panelists.
Thank you so much.